All right, welcome to The Explainer. Today, we're diving into something that, let's be honest, can be a real headache for a lot of us: dental insurance. It's confusing, right? Well, we're going to demystify it. Let's jump in. So, think about this for a second. Your health insurance? It's pretty much mandatory. But dental? That's always this separate, optional thing. Why? Why isn't it all just one big plan? It feels a little weird, doesn't it? Well, there's actually a really good reason for it, and stick with me because by the end of this, you're going to get it completely. Okay, so first up, what even is dental insurance? And spoiler alert, it's not just about your teeth. We're talking about the whole picture here, the health of your entire mouth.
All right, look closely at this definition. There are two words here that are super, super important: optional and percentage. This is critical. Unlike your regular health insurance, a dental plan is not designed to cover 100% of everything. You really have to think of it more like a partner in paying the bills, a cost-sharing tool. And honestly, if you get that one thing, you're already way ahead of the game.
Okay, so if we're sharing the cost, what are we actually sharing the cost of? You might be surprised. It covers a huge range of things, from your basic cleaning all the way up to some pretty serious procedures. Yeah, just look at this list. It's pretty massive, right? You've got your everyday preventative stuff: checkups, cleans, x-rays. That's the foundation. Then you get into the restorative work, fillings and crowns. But it doesn't stop there. It can cover specialized stuff like gum care, that's periodontics, and root canals, which is endodontics. Even things like getting a tooth pulled or getting replacements like bridges and implants. And of course, the big one for a lot of people with kids: braces, orthodontics. It's a lot. Okay, this next part is where the rubber meets the road. This is how the plan actually pays. It all boils down to three big decisions, or features, of your plan. And I promise you, if you can get your head around these three things, you can basically decode any dental plan someone throws at you. So choice number one is all about the network. Who can you actually go see? On one hand, you have plans that let you see literally any dentist you want. Total freedom. On the other hand, you have a PPO, a preferred provider organization. Think of it like a club. The insurance company has a bunch of dentists in their club who've agreed to cheaper, pre-negotiated prices. If you go to a dentist in that club, in-network, the plan pays a lot more. But if you go outside the club, out of network, you'll pay way more out of your own pocket. It's that classic trade-off, right? Freedom versus saving money. All right, choice number two. How does the plan figure out how much to pay? There are two main ways. The first is a scheduled plan. This is like a simple price menu. It literally says, for a filling, we pay $150, period. It doesn't care if your dentist charges $200, you're getting $150. It's simple, but you cover the rest. The second, and much more common type, is a non-scheduled plan. This works more like your regular medical insurance. It pays a percentage, say 80%, of what's called the usual, customary, and reasonable fee, or UCR. That's basically the going rate for that procedure in your city. And finally, choice number three is all about the order of payment. How does the money actually flow? Okay, step one, you pay your deductible first. That's a set amount, maybe $50 or $100, that you have to pay out of pocket before the insurance pays a dime. Step two, after you've paid your deductible, co-insurance starts. This is where you and the insurance company share the bill. Maybe you pay 20%, they pay 80%. But, and this is a big but, there's a step three. Every plan has an annual limit, a maximum amount they'll pay in 1 year. Once you hit that cap, say it's $1,500, you're paying 100% of everything after that until your plan resets next year. Okay, I know that was a lot of jargon: deductibles, co-insurance, networks. So how does this all actually work in the real world? Let's pull it all together with a super practical cheat sheet. This is how most plans actually organize everything. Here we go. This table is basically the Rosetta Stone for dental insurance. See how it works? Insurers lump everything into different tiers. Tier 1, preventive stuff like your cleanings, they often cover that at 100%. They don't even make you pay a deductible for it. And why do they do that? Well, they want you to go get checkups to find problems before they get big and expensive. Then you've got your basic tier. Think fillings. Here, you'll start sharing the cost. That 80-20 split is super common, and you have to pay your deductible first.
And then for the really big stuff, the major work like root canals, the plan helps less. You're often looking at a 50-50 split. But there's a catch. You've got to watch out for this one. Braces. Orthodontics is almost always a special case. It usually has its very own deductible and, even more importantly, its own, often much lower, lifetime or annual limit. It doesn't follow the normal rules, so you have to check that specifically. So, we've talked about what a plan does cover. Now let's flip it around. What does it not cover? This is the fine print, the catches. And knowing these exclusions can save you a ton of frustration and money. Here are the usual suspects. First, anything that's purely cosmetic, so teeth whitening is out. Second, and this is a big one, they won't pay to replace a tooth that was already missing when you bought the plan. Same goes for any dental work that was already started before your coverage kicked in. Oh, and if you lose your dentures or get hurt on the job, that's usually covered by other things, not your dental plan.
And this quote really nails it. It takes us all the way back to that first question we asked. See, the thing with dental care is that a lot of it is elective. Not elective like plastic surgery, but elective as in you can put it off. You know you need a crown, but you can wait a few months. And that simple fact that you can wait until you have insurance creates a massive headache for the insurance company. And that headache has a name: adverse selection. It's a fancy term for a really simple idea. It's when the people who are most likely to buy insurance are the ones who know for a fact they're about to need a ton of expensive work. And think about it. If the only people buying dental insurance are the ones who need a mouthful of crowns, the whole system collapses. The costs would be astronomical. This is the core reason dental insurance is its own separate, rule-filled world. So how do insurers protect themselves from that? Well, this is where all those frustrating rules come from. You ever see a plan that makes you wait 6 months or a year before it will cover a major service? Or one where the benefits are kind of lousy for the first year? That's not them being mean. Those are shields against adverse selection. They're trying to stop someone from signing up, getting thousands of dollars of work done, and then immediately canceling the plan. So when you pull it all together, you can see that dental insurance isn't just a simple benefit. It's a really complex game of trade-offs, tiers, and rules, all designed to balance costs and risk. But now you know the rules of that game. You're ready to look at your own plan and actually understand it. So I'll leave you with a final thought to chew on. Now that you know how it all works, what's the most important question you should be asking about your plan to make sure you're getting the most out of it? Thanks for joining me on The Explainer.